Welcome to our market news update. Today, we will dive into the latest movements in Wall Street, the implications of the upcoming Federal Reserve meeting, and the impact of global events on major stocks. As we approach the final Federal Reserve meeting of the year, traders are cautiously watching for a widely expected 25 basis point rate cut. This would mark the third consecutive cut, but the focus is shifting to what lies ahead in January. Goldman Sachs suggests that the Federal Reserve may hold steady in January, citing signs of a softening labor market and rising inflation. In contrast, Standard Chartered anticipates another cut, depending on upcoming labor data. Meanwhile, United States stock futures are trending lower as investors remain hesitant ahead of this critical Federal Reserve decision. Dow, Standard & Poor's 500, and Nasdaq futures have all slipped, reflecting a cautious market sentiment. On the earnings front, Nvidia has entered correction territory, suffering an 11% drop from its peak. This decline raises concerns about its position amidst escalating competition between the United States and China. Nvidia's challenges stem from export restrictions that limit its ability to sell advanced chips to Chinese firms. This has sparked an investigation into the company by Chinese authorities over alleged anti-monopoly practices. Despite these hurdles, Nvidia insists on maintaining its presence in the Chinese market, emphasizing the importance of providing quality products and services to its clients there. Shifting our focus to Europe, the German DAX index faces uncertainty following the dissolution of the government led by Chancellor Olaf Scholz. This political instability could weigh heavily on market performance. With a new election on the horizon, economic indicators show that Germany's business activity has contracted for 6 consecutive months, raising concerns about the country's economic future. In contrast, the DAX index has seen a remarkable rise of over 20% in 2024, outperforming its French counterpart, despite the ongoing political and economic challenges. As traders evaluate these developments, oil prices are also taking a hit, with crude futures declining ahead of the Federal Reserve meeting. Profit-taking appears to be the driving force behind this dip. With the recent weak retail sales data from China adding to the uncertainty, traders are hesitant to commit to significant positions ahead of the potential market-moving decisions from the Federal Reserve. The anticipated rate cut could stimulate economic growth and increase demand for oil, but until then, market participants are treading carefully, watching every development closely. Thank you for joining us for this market news update.